Hey guys, welcome back. So I'm at it again. I'm selling more options and I'm closing a few positions for some good profits. So let's talk about it. Now, I first want to disclose I'm not a financial professional. I can't tell you what to do, when to do it, or how to do it in the financial markets. I definitely recommend seeking a financial professional when it comes to investing in the stock market. Now, for me, I'm selling options as a form of income with about 30% of my portfolio. And this week, I closed one position for a realized profit, and then I sold two new positions, and I'm thinking about selling another position or opening up a new position with my portfolio. So I'm going to take you guys through the charts, tell you a little bit about my thinking, about why I took these moves I made, and we'll talk about it. Now let's look at AMD because this was my realized gain and I closed the position. I'll show you what my thoughts were on this trade. I've got the daily chart here for AMD. AMD right now is trading around $216 a share. And I have done this trade before where I took out a $200 strike price around $210 a share back here when this OpenAI announcement came through. And it just was super bullish during that news. And I made a full $3,000 premium from that trade. And so I've been still eyeballing this stock. And obviously it's gotten weak as of late. And on this day, about a week ago, it got down here to the 220 level. So I said, you know what? I think it's time to take this trade again. Similar strike price, $200 a share. And I went out to December 26 for like $3,600 in premium on a $100,000 position, 5 contracts. Excuse me. And then the very next day, this thing dumps all the way down to $203. This was due to Meta announcing a purchase of Tensor processor chips from Google. And so Google stock went flying and all the other AI stocks took a dump. And so I was really bummed that I could have sold this premium down at 203 a share. I mean, that would have been like probably $5,000. So I was down on this position this day and the next day. It even got below 200 a share, down to 194. So I was really bummed, but that's how trading goes. You never know what kind of news is going to happen the next day. But, I wasn't scared of this trade because I would buy these shares at 200 a share anyways. And of course, we popped up here back to the 220 levels. Somehow went down and retested the 195 the very next day. So this thing's all over the place. And then, of course, we closed pretty high here, back up to 206, above my strike price. So I figured, man, this is probably going to rally, get some strength going. And it did. We've had 3 days, 4 days of strength in AMD. And all the way up here at 225, almost at the top, I closed the position on these put options for $21.03 in profits, $2,103. And the percentage on that contract was a 56% gain is what I made on that. So I didn't collect the full 3,600, which I would have liked to have done. I had 3 weeks to go on this contract, but this news is kind of short-term bearish in AMD, not long-term, but the market feels a little weak when it comes to the AI trade. Even today, we're a little red, but could we see some continuation? We could see back down to the 200s. If that happens, I might get interested in this trade again. Maybe down, I might sell the 180s, maybe go out a few weeks, collect a couple thousand in premium and see what happens. But for now, I'm out of the stock again. I'm in the stock long-term on my long-term portfolio, but I'm out of the stock from an options perspective. But it's a good trade. Profit is profit. And no one ever went broke taking profit in the stock market. So there's that trade. And then I took another trade in Resolve. Okay, now this stock is a volatile stock. It's crazy. I don't recommend getting involved in it. It's an AI play. They do AI agents. And I got in at $4 a share. I sold enough premium to get me down to $3.60 a share. That's where my average is. And I'm down around $2,500, give or take a few dollars. I ended up doing another put option. I sold like 10 more contracts and I made like $200. It wasn't a big deal. But then this week, it was pretty weak this day here. And when it was down to like $2.80, I ended up selling the $4 strikes, covered calls. I sold my entire position, 2,500 shares or 25 contracts out to December 26th for $380, which is really good premium since I'm like 30% away from this strike price. I still made $400 in premium, which is pretty good. That's why I like this stock from a implied volatility. The implied volatility is like at 100+%. So you can collect a buco bucks when it comes to premium, but you got to deal with the volatility. And of course, this company ended up buying another company. I think it's called like CoreWeave or something like that, with debt and with stock. So this stock got diluted even more, and then it dumped. Obviously, the day I sold cover calls, it dumped down to $2.70 a share. Then the next day down to $2.52, and then the next day it even hit $2.46. So I was down even more. But then today it looked like it rallied pretty good. It's up to $2.92. By December 26th, I could be out of this trade. It could easily trade up to $4 a share. Even this day, it made like a 25% move all the way up to $3.70. I should have sold cover calls there. I thought it was going to keep pushing, but we had this silly tensor processor news that dumped it that day. I was up 25%, and then it dumped because of that GPU news from Google and Meta, unfortunately. But that's how the market works. So we'll see what happens there. I kind of want to stay in the trade, if I'm being honest. I'd like for this trade to close below 4, just below 4, and then sell more covered calls because the premium is just fantastic on this stock. But again, I don't recommend getting into it. I mean, if you look at this thing, it is a hot mess. It's right around these levels where it was trading at before. It made this huge move up to almost $10 a share and then dumped all the way back down. But there's some analysts, even here, it says here, Resolve AI price target maintained with a $10 per share price target by H.C. Wainwright and Company. I don't even know who that is. It's probably some investment firm or whatever, analyst firm. But I don't really consider analyst targets to be worth anything, to be honest. But, it probably will start to trade up in these levels if it still has that kind of AI hype. We'll see what happens. And then I ended up getting into a stock I've owned for 15 years. I've been sick of how the performance is on this stock, and it's Pfizer. I've been in this stock for 15 years, like I said, and it's just been a poor performer. For 15 years, I'm only up 100%. And almost all my other positions, like Apple and these mutual funds I'm in, I'm up 300, 400, 500%. The SPY is up 600% or more over 15 years. This thing is pathetic, and it's just been pissing me off. I should have sold it long ago. I should have sold it back in, I got to go way back. I'm going to do the monthly here. I should have sold this back in 2020 when it peaked at $60 a share. I knew I should have sold it. I was thinking about it too, but I didn't. And then it sold off, obviously, due to demand of the COVID vaccine and all that. And it's just a sideways trader. It's a dividend. It trades at like a 7% yield, which is okay. I make $300 a quarter on it. I'm not going to complain, but I am going to complain. I expect more out of a good quality company like Pfizer to trade like it does. So now instead, I'm going to collect the dividend if I stay in these shares, but I'm going to also sell covered calls. Now the premium is not very good on this stock. You got to be almost at the money to sell anything decent. So in this thing, if you look on this chart, look at this thing, man. This is pathetic. It's just been trading right around this 25 level for months, if not years. And then it dumped all the way down here to 21, I think, due to Trump getting elected and the whole they're against the pharma industry and all that. But it's been rallying as of late. It did get above 25, up to 28-ish. But then, of course, it sold back off down to 24. Now it's back up to 26. And so I sold the 26 strike price for December 26th, all 800 shares, 8 contracts. I own 877 shares, about 20 grand worth. I sold all 8 of them for covered calls, and I don't care if I get assigned and I have to sell these shares. It's not going to bother me. If I want back in, I'll sell more puts and buy back the shares if I really want them. But I anticipate this is just going to sell off again back to $24, and I won't get assignment. And then I'm going to do the same thing. The next time it rallies up to 26, I'm going to sell more covered calls until I get sold out of these shares. I'm just sick of it. The dividend's okay, but for 100% gain over 15 years, that's pathetic. So I made $440 on that trade. Or not made, but I sold $440 on that trade. We'll see what happens. And then I just made a trade like 10 minutes ago on Oracle. Unfortunately, Oracle, I've been down pretty bad on this trade. I mean, you guys, if you've been following this channel and the stock ticker video, or the Friday ticker, you guys know I sold puts at the 245 level. My average is at 238, right around here. And this thing has been dumping and dumping and dumping. It can't stop dumping. It got down here to 185. I was down maybe $15,000. Kind of a bummer. It is what it is, though. You gotta learn to deal with volatility. But I knew it was probably going to bottom out and rally here pretty soon. So I've been patient these last couple days, waiting and waiting and waiting. And, it's up here up to the 215 area. And I sold my 3 contracts, 300 shares that I own at 240 a share is my strike price. Now, the reason I wanted to sell these today was I don't know if it'll come back down here. It's still pretty bearish if you ask me. This chart is super bearish. But I wanted to sell contracts before earnings because the implied volatility, the amount of movement we're going to see with the stock is that much higher. The risk is higher to selling puts or covered calls. And so the premium I got was like at a 70% implied volatility. So I sold all 3 contracts at 240 out to December 26th for $1,800. It was just shy of that, $1,785. And so that's going to lower my basis by 5 points. So now instead of 238, if I keep all this premium, my average will go down to about 232. Okay, so I'm going to keep lowering my basis if I have to stay in this trade. But if the stock goes down, I'll close the position and keep all that money most likely. If the stock rallies, if it goes above 240, and hopefully the person exercises their contracts sooner than later, then I'll be able to get out of this trade and I'll make ballpark, what was that? 1,800 plus 600. That's 2,200. So kind of like a base hit. It hasn't been that good of a trade for me because it went south so fast. But if it does go above my strike price and I get called out, meaning I get assigned and have to sell shares, I'll take 2,200 any day. That's a base hit. That's a good trade. For most people, 2,200 would be a very nice trade. So I'll be happy with that. We'll see what happens. If it does go against me and I close the position out, I'll just wait for another rally and sell more covered calls at some point. So I'm indifferent to this one. If I have to sell shares or if I have to keep them, it doesn't matter to me. We'll see what happens. So those are my trades that I'm involved in today. I think I'm still doing pretty good selling options, but you guys let me know what you guys are doing in the markets these days. Are you getting long or are you trying to sell options? You guys let me know in the comments below. And if you're learning from these videos, let me know as well. If you feel like the way I'm interpreting the charts and the sentiment is helping you learn, that'd be great to know. So if you guys could like and subscribe to the channel, take a look at my previous video. And everyone have a great day. Later.